it's 7:03. We can get started. I just want to take a minute to welcome everyone who's here on this presentation. We'll be talking about buying a property with the current market conditions. We know that there's been a lot of fluctuations up and down, and in most cases, it's confusing, especially for a buyer. And also particularly for those first-time home buyers who've never been in this market. They've seen swings of up and downs, and we just wanted to sit here, have a quick presentation, and of course, answer any questions that you might have. So if you have any questions while we're speaking, you can put them in the chat box or the Q&A section, and we'll get those questions answered. We know that there are questions that were submitted ahead of time. We'll get to those as well. And but if there's something specific that you want us to address right away, please let us know, and we'll do just that. This presentation is being recorded, and we will have a recording. We usually post a recording on our YouTube channel. So if you go to YouTube, search Joseline Nicholas, you'll be able to see this presentation in about 2 days. And you'll also be able to see previous webinars that we've done. We do webinars on a regular basis, just addressing different topics that people are wanting to talk about in Ontario. So if you have any questions about selling, buying, investments, that is something that we specialize in. And Farhaan and I do this on a regular basis. So if you have a question, please let us know. Another thing that we've been able to offer to people who attend webinars is we've been able to do one-on-one consultations. So if while we're speaking here, you feel like you wanted to dive deeper on your situation, or you want us to look at your numbers, or kind of, look at your situation in a more specific way, please let us know. We can always schedule a one-on-one consultation where we can look at what's going on in your personal situation and see how we can help. So feel free to let us know as well, and we'll take it from there. So for now, we'll get started. I'll do a quick presentation of what the market is doing right now, and then I'll pass it on to Farhaan, who's going to talk about everything really, because he sees the market from a mortgage broker perspective, because he's a mortgage broker. So he can tell us what's going on the mortgage side, but he's also a realtor, so he can also share and an investor. So he definitely has multiple lenses where he can look at a situation and kind of give us his take on what the market is doing and how someone who's looking to buy should be approaching the market.
Hi, everyone. My name is Farhaan. Thank you, Jocelyn, for bringing me into this. I'm really looking forward to learning from you. It's always amazing to get your overview of what's going on in the market. And a bit about me, I mostly focus on mortgage side of transaction. And my goal is really to find the best mortgage solution for someone. A lot of time when someone is looking to buy a home, they just go to bank, and generally bank gives them one option, and that either discourage them or they take it. What mortgage brokers have the ability to do is to shop around for mortgages at multiple lenders, look at different solutions, and see if you can qualify for something different than what you were hoping for. The main reason behind it is everybody's need is very unique, and almost every bank only offers one product, but different banks offer different products. So if you have the ability to shop around in between them, that's what mortgage broker allows you to do. So Jocelyn, I'm looking forward to learning from you from real estate side, and then I'll focus a bit more on mortgage side and see how we can assist everyone with the mortgages. Again, if you are a first-time home buyer, or if you are an investor, or if you are another fellow real estate agent, any questions or concerns you have, my information will be posted at the end. You could reach out to me. I'll be happy to answer those and help you with the situation.
Absolutely. So I'll get started, and very soon I'll pass it on to you, Farhaan.
Thank you.
No worries. All right, it's a quick introduction. As I said, my name is Joseline Nicholas, and I am a full-time broker, like a real estate broker, and I am also a full-time investor. So not only am I selling and buying homes for my clients, but I'm also investing in real estate actively, and I've been investing in real estate for the last 10 years. If I had to pick a superpower, it'd probably be building wealth in real estate. And the reason I like to highlight this is because I really love sharing about my experience as a real estate investor, but also helping our clients buy and sell real estate from an investment perspective. So if you have any questions about building wealth through real estate, it's one of the best vehicles. And we've seen that. I've seen what it's done for my clients. That is something that we're always happy to chat about. Okay, so looking at our Canadian market, there are a few variables that have been moving. Most of you probably already know. But one of the things that's been driving our economy is inflation. And the Bank of Canada has been trying to fight inflation for the last 2 years. So right now, just as a quick update, this is how far we've come with inflation. I put a long-term trend so we can see and compare from what we've been through in the past. And as you can see, the Bank of Canada likes to keep inflation around 2%. That's the red line. And we've fluctuated over time up and above the graph, but also we've gone under the 2% target. But the worst we've ever had in the last couple of years, I could say, is at the peak, that was somewhere in mid-2022, where inflation went up to 8%. And the Bank of Canada started increasing rates to kind of reduce spending and impact people's pockets. Some people have felt it more than others, but the goal was to influence people's spending decisions, therefore bring down inflation. And that's what we've seen. So as you can see, as a result of that, inflation has been going down, and right now we're at the lowest we've had it in the last 2 years at 2.5%. Because inflation has come down, the Bank of Canada started reducing rates. So right now, from a rate perspective, you can see this is a 10-year trend. We have had the highest rates in the last 10 years, and we were at 5% as the overnight rate, and now we've come down to 4.25%, and they have said they'll continue to reduce rates as long as inflation stays within control. So we're seeing in the market, people respond to that. We're starting to see activity come back, and we also starting to see sellers get excited about the rate cuts and listing their homes. So now we have more listings than we had a year ago, but it's just as a response of what the sellers are seeing, an opportunity to sell because rates are coming down. But we also have buyers who are coming in and getting an opportunity to buy something at a reasonable price. Talking of reasonable prices, this is what, if you came in early, because Farhaan and I were just talking about this, about people who bought properties at the peak. So you can see right now, this is the price trend over time. There's always multiple things I like to point out when I'm talking about this graph. One thing I want to talk about is how, even though our market fluctuates up and down, the long-term trend is upward. So if someone is looking to buy a home as a their own residence, you're looking to stay in this home long-term, right? If it's something that you're purchasing, you're wanting to live there 10 years. If we look at a 10-year perspective, prices are always going up. Even if you look at a 30-year, 40-year trend. In fact, I was looking at this, and would you believe it, but around 2014 in Ontario, the average price of a home was $280 in Ontario. 24, I couldn't believe, like 10 years ago, right? So we went from 280, now the average price is somewhere close to 700. So you can see that over time, the prices are going up. But of course, if you look at short-term trends, there's always fluctuations. The highest right now we've had, the biggest drop we've had is that we had in 2022, when the prices, the average price of a home in Ontario, this is Ontario data. So the average price of a home was around $875. And now it's gone down to just under 700. So we've seen that fluctuation, but this is also a good opportunity for someone who's looking to buy, because people have waited for the market to crash, and that crash that they've been talking about is here, right? And one thing that I like to highlight is the market has tried to recover a couple of times, but then there's always new things that the government will bring in that'll cause the market to go back down. For example, the first recovery here that you see, the uptick, was when the Bank of Canada stopped increasing rates. And I think we were around 4.5%. And they stopped increasing, and then the market started recovering because people thought that was it. However, when the Bank of Canada saw a trend of prices going up, they started increasing rates again. So we went from 4.5% to 5%. And that increase in rates resulted in another, what you could call decline. So we've seen that happen. And then, of course, they introduced the capital gain tax, where they increased it from 50% of capital gain being taxable to now 66%. So as they keep introducing these new things, we're seeing that impact the market. But generally, we can say that the market is stable. I think we've gone as far as we will go in terms of prices going down. And from what I hear from other economists, as well as other realtors and other professionals in the industry, the expectation is that prices will start to go up again, especially as rates come down. And I think we're seeing a little bit of that already, except it's being offset by the amount of inventory that's on market. So if inventory stayed the same, you'll start to see prices go up. But right now, because all the sellers that we're looking to sell are now putting their homes on market, so we're seeing that prices are staying stable, but there's more inventory for sure on the market, which is good for a buyer. Like right now, as a buyer, I would even go as far as saying that this is the closest we've come to a buyer's market, especially if you look at August. August was a very, like, especially at the beginning of August, it was a very quiet time where there's a lot of listing on market and very few buyers. So if you're a buyer right now thinking about buying, I think this is definitely an opportunity where, especially in a confusing market like this where things are not stable, it's a good time for you to come in, work with a good experienced realtor who can negotiate on the other side and negotiate for your best interest. So that's been the situation right now that we're trying to navigate. In terms of inventory, as I was saying, so this is the number of homes on market over time, and this is just for the city of Guelph. And you can see for sure that inventory has fluctuated over time. This is that COVID time between 2021 and 2022, when we had the least amount of homes on market. In fact, I remember at the lowest point here, we had about 40 homes on market for all of Guelph. And now it started to come up. And right now we have about 388 homes on market for the city of Guelph. And we have about 1,645 in Waterloo region. So for the Waterloo region area, we have nearly 50% more homes on market than we had last year. And for Guelph, we have 59% more homes on market than we had the same period last year. So definitely inventory has gone up. And because inventory has gone up, we're seeing that softening on price, especially because buyers have options. This is a very good thing for a buyer because now you have options. Now, we also have a type of buyer who has a home to sell. That is a whole different situation. And we're seeing that sellers, especially if you're upsizing, it's a good thing for you because you're selling, yes, at a lower price, but you're buying a home that could have been more expensive at even a better discount. So if we time it very well and we understand the trends of what's happening in the market, for someone who's upgrading, it's definitely a good thing for them because they're able to sell at a reasonable price and then they're able to get even a better deal on the buy. That's what it's been so far. When we look at income in Canadian, I wanted to show this graph just to show that this region, like Wellington County, Waterloo region, our income, household income, is usually higher than that of Ontario and that of Canada. So definitely this is a graph that I like to show to say this is a region where prices will always do well. Like the housing market is the prices will be stable, or if not trending upwards because the income is there. When we're looking at the quality of residents that's coming here, our median household income is higher than that of the province as well as that of the country, which is always a good thing for the housing market in our area. This graph or these numbers are a little bit outdated. This is 2021. But one thing that I wanted to show is that population growth, like our country is growing, our province is growing. But what's more important is that our region, like Wellington County and Waterloo region, we are growing faster than the rest of the country. So this is 2021 statistics. I think it's gotten even more now. I think our population is now at 41 million people in Canada. Yep. And we're seeing the majority of those people are coming to Ontario. And in addition to that, when people come to Ontario, they're coming to Southern Ontario, which is Wellington County and Waterloo region. So we see that the province is growing at on average 5.77%, but Waterloo region is growing at 9.7%. Right? So basically that shows that our housing in this area is on demand. So even though people are coming to Canada, majority of them will end up in this area, Southern Ontario, which kind of strengthens our market, so to speak. This I also like to show to investors who are looking for places to invest. You want to invest where people are going, because that means that this is where the jobs are, this is where people want to live. So on a long-term trend, like we are looking, if you look 10 years from now, there'll be more people here as compared to most cities in Canada, which means the housing, the prices will continue to increase over time. So for people who are here and they're wondering how they can get started buying a property, the first thing that we tell our clients to think about is to confirm the timelines based on your circumstances. Are you ready? What's holding you back? We can, we basically look at your situation, look at what you need and where you need to be. If you have any life-changing events coming up, and kind of see how to weave that into the story to see if you're ready or if you won't need to wait. You have the down payment. Did you just start a new job? Things like that. You have are you new to Canada? Things like that, that we look at the whole situation and see where you're at on the journey. Once you decide on your timelines, then we need to get you pre-approved. In this case, we will connect with Farhaan, or if you have a preferred mortgage broker or a bank that you have a relationship with, we connect with a mortgage broker who can walk you through the steps of what it takes to get pre-approved. Sometimes people come to us early, and that's a good thing, because then we can work with them and say, you want to buy a home in 12 months. What do we need to do today to make it easier for you to qualify? So, even if you happen to be early, you're just in that phase of looking for information, it's not a bad thing for you to be here, because if you connect with a mortgage broker, like I said, we can put you on that plan of, I'm ready to buy in 2 years, let's say. What do I need to do today to make it easier for me to buy in 2 years? After that, we reach out for a personalized consultation. Now that you've been pre-approved, we know what your budget is. We can now sit down and say, hey, what are you looking for? What's important to you? What neighborhoods do you need to be in? What schools do you need to be around? Do you have kids? Do you need to be by 401? Are you commuting to work? So then we sit down, look at the whole picture, and then we're able to go to step 4, which is home search and doing your due diligence to make sure that you're buying a property that meets your need, but also to make sure you're getting a good deal. To be honest, I am very proud of saying that our majority of our clients get good deals. We take pride in that, because I love going home knowing that we've worked hard for our client and going home with a deal. So when we talk about due diligence, we're looking at the full picture of, like, have we done an inspection? Is this property in good condition? Given everything else that's around you, how do you compare to the homes around you when you're ready to sell? In fact, in most cases, we're thinking, when you're ready to sell, how will this property compare to the rest of the neighborhood? If you're buying a property that's inferior today, unless you plan on improving it over time, but there are certain things that you can't change. For example, if it's a noisy area, if let's say there's a highway right in your backyard, these are things that we need to think about, because we know that our clients, but on average, Canadians are changing homes every 5 years. So we know 5 years from now, when you're ready to change or to upgrade, we want to make sure that we thought about that. We want to make sure that we've looked at all the negative things that can impact your home when you're ready to sell. So as we talk about due diligence, those are all things that we look at. And of course, we have to negotiate the transaction and help you, work with you to close your home. So these are basically, like, in a nutshell, if we're talking to first-time home buyers, things that we look at when we're taking you through the process of buying a home. And to be honest, it looks different for every person, just because people are in different situations, and the timeline looks different for every person who's coming through based on their situation. Anyway, so this is my contact information. I wanted to basically just give you a quick snapshot of what it looks like to, what the market is looking like and what you should be thinking about if you're trying to buy a property. Now I will turn it over to Farhaan, who's going to talk about rates, how to qualify, what you need to be thinking about from a mortgage perspective. And of course, if you have questions, let us know and we'll address those at the end. Farhaan, take it over.
Wow, that was phenomenal. It would be very difficult to continue on that pace. Th Thank you so much, Jocelyn, for
No,
providing us, and I learned so much. I remember when I bought my first home, this was in 2011, and I paid $224,000 for that townhouse. And looking at that graph, that
wow.
makes so much sense now,
Yeah,
because that's where the prices were back at that point. But so much has changed since then.
absolutely.
And
I paid
we
350 for my first home. And it was detached with 2 units.
that's incredible. No, I did not know much, so I bought myself a condo townhouse, the first property I bought.
Yeah,
And I had a lot of good memories in it. I rented out good portion of it and lived in one of the rooms. I was a single guy back then.
yeah,
So I had the ability to generate some income from it.
absolutely.
Now, just to give you a bit of update on what's happening with mortgages, I'm gonna share my screen. So a bit about myself. I'm a mortgage broker, have been for the past 10 years. I have had a chance to work with major banks. So I've been a real estate investor. I have multiple rental properties. Most of my client base does is includes people who own multiple rental properties. So I have a lot of experience working with those people. But we also do a lot of first-time home buyers. And as Jocelyn was talking about, a lot of time when people are thinking of buying a home, it really is a piece of a puzzle, which we have to fit the pieces together. Because most of the time when people start thinking of buying a home, they think of their circumstances that this is the what they're looking for. But as you get them approved for mortgages, or there is some deficiency you see in their cash flows and so on average, by the time we start working with a first time home buyer to the actual time they actually buy a home is about 6 to 12 month of period. And that time is either we have to prep them to improve their credit a little bit, possibly at some of them, we recommend maybe they need to go out and find a job where they can make a little bit more money so they can get into their dream home, or improve their savings a bit more where they have the ability to put in a larger down payment, or look for other solutions which are available, such as co-housing, where you could own a home with another family, and two-unit property where you could live in one unit and they could live in another unit. So there's a lot of options we can always go through, take a look into pros and cons of it, and depending on what exactly that client is looking for, we can provide them that detail. Now, obviously, it's obvious at the moment that the interest rates have started to decline, right? Bank of Canada has reduced the rates, fixed rates have gone down a bit, but cost of borrowing is still fairly high as of right now, where affording mortgage is still not easy. But that's where, again, we can set up plans for people where we possibly set up mortgage with a longer amortization, so the payment is less. There are solutions where we can do interest only payments, etc., depending on what someone is looking for. Okay, so just to give you a bit of an idea on what's happening with a 3-year fixed and 5-year fixed rate at the moment, the 3-year fixed rate, which we have been seeing lately, is around 4.39 for 3 years on insured mortgages. And on uninsured mortgages, where you are making more than 20% or higher down payment, we are seeing around 4.59 or 4.49, depending on your credit history. That's where we are looking at rates. Now, if we were to compare that to a year ago, we are down almost 1%. So there has been a big drop in those rates. 5 years is even lower, where we are looking at the moment is around 4.14 to 4.19% for insured mortgages, depending on your credit. And for uninsured mortgages, they are around 4.34 to 4.39, again, depending on your credit and your circumstances. And again, that is also a full percentage lower than where it used to be a year ago. So we are seeing decline in rate market at fairly consistent level. And in the last 2 weeks after the last draw with Bank of Canada, we have seen a further drop in the mortgage rates. Another thing which a lot of time people don't talk about is at the moment, banks are hungry for business. they are willing to go a little bit further. Each bank is competing as much as possible because not a lot of people have bought homes in the last 1 year. So they are sitting on a lot of money, which they do need to lend out. So they are a bit motivated to lend out for mortgages. So they are giving more and more sweet options to people who are taking mortgages, such as cashback options, uh, reduce of the mortgage payments, etc., etc., etc. First couple of payments, there is a lender who is covering that. So again, depending on what the product we choose, there are options available for people to take advantage of that. Another common thing which, as a mortgage broker, I always see, and I had this couple in my office last week. The both of them work in trades, and they just never thought they can get a mortgage because whenever they went to their own bank said, we are not qualifying you because most of your income is cash. And that is true. If you were to work with a bigger bank, they generally do not qualify you for mortgage financing if you don't have regular paycheck or if you are not self-employed making a lot of money. But there are a lot of alternative solutions available, especially for individuals who don't have the ability to get mortgage with a bank. There are options available for people who don't have full 20% down payment. There is a bunch of those options individualized available for clients, and that's where the mortgage broker can come in and help you um, with those options and navigate those issues to see what solution works best for you. Again, one of the scenario Jocelyn was discussing was if you are in a smaller house, or if you are in a townhouse, or if you're in a condo at the moment, this is one of the best time to make a change because bigger properties have taken much bigger hits versus smaller properties. So even if you were to go from a smaller townhouse to a detached home, your mortgage payment won't go up by much, but you would get a much bigger property. One of the client I was just helping last week, they sold their townhouse on south end of Guelph and they bought themselves a detached home. Their townhouse was just 1,000 square feet. They sold it for $750,000, and they bought a detached home for $864,000 with 2,500 square feet. So they were able to get 1.5 times more square feet and much bigger home with ability to rent out their basement for just about $125,000 more. So again, when you take a look into apples to apples, sometimes it seems like if you were to go in a bigger house, you're gonna pay more money. That's not always true. And this is one of those times where due to stress test, due to higher mortgage interest rate, the smaller townhouses, condo townhouses, they are in much higher demand than the larger detached home because so many people have the ability to qualify for those. Again, if we were to take a look into supply and demand at the moment, there is a lot of supply of the homes at the moment, but I truly believe that is a very temporary issue as there is population growth happening, as there is more and more people coming in into our region of Wellington County, Waterloo region. We're gonna see the supply is gonna go down as because builders are not building enough homes. One of the sad part of high inflation for the past 2.5 years has been is that builders have stopped building homes at the moment. The main reason is the cost of construction is higher than the sale price. So they are not building homes. On the same time, every year on average, we are experiencing that in our markets, Wellington County, as well as in Waterloo County, the population is going up by 10% every single year. So we have a lot of people coming in, and yet on the same time, builders are not building homes. So in a short terms, yes, we are seeing a lot of supply because people are seeing the Bank of Canada reducing the rate. So a lot of investors are exiting the market. A lot of people are selling their homes. But I'm a true believer that in a year to 2 years, we're gonna see a perfect storm where the interest rates have gone down. Builders haven't built enough homes, the population has gone up, and there is just not enough houses. So everything which we have on the market is just going to disappear, and we will go again from a buyer's market or more balanced market to a very much like a seller's market, how which we had in 2022. Um, that is going to happen. No, unless there is big changes which come in, which doesn't seem like any of that is coming in, we are going to experience that again 2022 again. One of the things when it comes to mortgages, we always have to pay attention to is the bond yield. Bond yield is what actually determines the interest rate. And here I have put in the 5-year government bond yield for the last 6 months. And as you can see, it was almost at one point very close to 4%, and it has gone down now to more closer to 2.7%. So there is a significant amount of drop. Another thing what it does generally is generally banks, their 5-year fixed rate is about 1.25% higher than the bank yield. So we are gonna start to see rates at 3.99, 3.94%. And that is a very, very good mortgage rate, despite of, a lot of us are used to of COVID rates where they were like 1.5, 1.6%. That's not normal. These rates, once it comes under 4%, we'll see a lot more buyers rushing back into the market and trying to get into home ownership because we will start moving towards normalization. What we are anticipating with Bank of Canada for the next 2024 is we're going to see 2 more rate cuts. 2024, 2025, we are seeing at least 2 to 3 further rate cuts by them. And what that is gonna do on variable rate mortgages is it's gonna make the situation very, very, very competitive, where we will have access to money at fairly good interest rate. Um, and with lower payments and more options. So that is coming in the next 1 year, as well as there is a lot of mortgage renewals coming, which is going to put more pressures on banks to provide better options for the clients. Another trend which we are seeing is happening quite a bit is um, people are trying to shop online for mortgage rates, which is amazing. It opens up a new marketplace, but like everything else, there is good and bad things. Good thing is generally you do have the ability to get a little bit better of an interest rate, which is phenomenal. But it also comes with some challenges. I had a client in my office 2 weeks ago who went through the whole mortgage process online with someone, and unfortunately, the online brokerages, very few of them would do much due diligence. He bought a property where there was train tracks right behind it. And now, after a year, the mortgage lender they chose for the client is not willing to renew the mortgage because when the renewal came up, they went through their due diligence and they realized, oh, there's train tracks at the back. That's a risk for them, which they're not willing to take anymore. And they are asking the client to pay back the mortgage. Or I have seen a lot of cases where the lender comes back and start asking client to make a larger balloon payment in their mortgage when they don't use the right lender. So as much as interest rate is important, it's also very, very critical to choose the right product, right option, and use someone who is in that neighborhood, who knows the most amount of who knows the lenders there, because everything can change. I hear those stories all the time where the lender decide to walk away from the mortgage 2 or 3 days before closing because there was something which the online brokerage didn't know about, and now they have come to know about it and they don't want to proceed with the mortgage. And that leaves a very bad taste. So again, there is a lot of benefit to online brokerages, especially if you are, let's say if you're living in Toronto, you're buying a condo, there is 100 condos exactly like that. But if you are working in a market like Waterloo or Wellington, there is variety of properties, there is variety of mortgage solutions, variety of mortgage lenders. It's generally a better idea to consult with someone local who knows what's happening, what's going on, especially if you're buying a property which is a bit of an irregular property. Um, and make sure that you do use their expertise and let them walk you through to getting the mortgage. Uh, that's basically it from my side. Again, all in all, what we are seeing in the marketplace is good news for the next 2 years. We have had a very, very difficult 2023. We have had a very, very difficult early part of 2024 from mortgages side where the rates went up, but now they're starting to come down. And we are seeing easement in people's affordability as well as in their monthly payment where they can be at bit more ease with their payment. So I'll pass it on to Jocelyn, and I guess we'll open the floor up if anyone have any questions. I think we can cover some of them right now.
Thank you very much, Farhaan. This is perfect. We're right on time. So we have some questions that were submitted ahead of time. Um, I know I've answered one more question privately, but if people have questions on this presentation, please submit them. But right now, while we wait for that, we'll just dive into the questions that were submitted ahead of time because we did send out a link for people to submit their questions. So if you see me on my phone, that's what I'm doing. I'm just pulling up the questions and then we'll get started. Okay. So the first question is, do you see home prices going up early next year?
From my perspective, I'm seeing them going up already.
Mm,
So since the most recent rate cut by Bank of Canada,
yeah,
I was sharing that story with Jocelyn before we
yeah,
went live. I had a couple literally in tears called me and they were crying. And the reason behind was that they put in an offer and there was now a couple of further offers on that property
yeah,
and they lost it. Um, so
yeah,
what we have to take a look into, the way I always take a look into real estate is what is it gonna cost to build a home? And right now, cost of construction is significantly higher than the resale price. So in a short term, we are gonna see an increase in prices.
absolutely. And we're seeing a lot of good opportunities too with sellers who must sell. So I actually like the market we're in right now because there's just a lot more opportunities for the buyer. And also, I feel like it's a market that allows the seller to sell for a good price. We've had some clients that have upgraded in this market where they've sold. They didn't get exactly what they wanted, but they got a fantastic deal on the buy. I don't think those opportunities will continue because as more buyers enter the market, as rates come down, and we know that there are people who are just waiting for the right moment to buy. There are buyers out there who froze for 2 years, right? They've been frozen for 2 years, waiting for the market to get better before they can buy. So I think as those people start to enter the market, these opportunities will definitely disappear, therefore increasing prices. So I also do believe the prices will definitely go up in the next months, like in the next few months as rates come down. Okay, so next question is, I'm a first-time home buyer. I have 20% down payment for about $850,000 home. Do you recommend doing a 20% down payment or 5% down payment?
Well, it's a wonderful question, and I'm so happy you ask because this is the way I look at it. If you were to do 5% down payment, you have to pay significant amount of money in CMHC premium. Okay,
Mm,
so let's just pull out the exact number so I can give you exact details here. But let's say if you were to buy a $850,000 home and you were to do the minimum down payment at it, um, which will be 25 plus 35. So at 60,000 will be the down payment. Your insurance premium would be, sorry, give me a moment, Jocelyn. I'm just trying to run all the numbers so I don't give the wrong information out here.
oh, take your time.
Okay. So your insurance premium alone would be, it's just loading up, and here you go. Your insurance premium would be 31,600. Okay. And then you also take a mortgage for 25 years versus 30 years. The way I look at it is between 60,000 and 100,000 and 20% down payment, which is 170,000. The difference is $110,000. Okay. To save that $110,000 upfront, you have to pay $31,600, which is silly, if you ask me. It makes absolutely no sense. The other challenge which you have with an insured mortgage is you have 25-year amortization. So your monthly mortgage payment is significantly higher than 30-year mortgage. Now, I'm I recommend 30-year mortgage, but I also always have this discussion with my clients. Just because you have a 30-year mortgage doesn't mean you need to pay it in 30 years.
Mm.
Even as insane as the mortgage payments are, in the last 10 years, I have seen so many couples pay off their homes. If you do put a plan together and you work hard at it and you are make some short-term sacrifices, you have the ability to knock off your mortgage very, very quickly. Um, Most of the lenders do allow you to make a lot of extra payments, privilege payments into your mortgage. Most of the lenders allow 20% of the balance, which at 850,000 is about close to $170,000 additional you can put in your mortgage every single month, every single year without any penalty. So, uh, by all sake, please, 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 if you have the ability to put 20%, do put 20% down payment.
Absolutely, I agree. I have a question here that's asking about the 1 million to $2 million mark. We've spoken mostly about the 700 to $800,000 homes. How about the ones over a million? So I guess I can start that a lot of you're right, we spent a lot of time talking about 700 to 800,000, but one of the reasons why I like to talk about that market is because that's the median price of a home right now in our market, and a lot of people are looking at that price point. However, that person who's looking for a home that is above a million to two, I would say that most of what we say does apply there as well. In fact, I was looking at homes today because I have a client who's looking for rural homes. Rural homes have gone down in price right now. Like I'm looking at all the opportunities available, somewhere around 1.5, and there's just a lot of homes with acreage available. So I think that most of what we say definitely does apply there, except with a home above $1 million, you cannot do 5% down payment. You have to do 20% down payment. So there's some differences, but for the most part, I think what we say it applies to those homes as well. What do you think?
I agree 100%. There is a huge opportunity, especially if you're looking for houses between $1 million to $2 million. There is few things which have changed. Number one, if you were to go 5 years ago, most of the lenders, they would do up to $1 million, you can do 20% down payment. Anything over that, you have to do 50% down payment and 50% they will give you as a mortgage.
Mhm.
Most of the lenders have changed that policy now, where they do allow you even up to $2 million to put in 20% down payment. So you don't need to have a lot of money
Mhm.
um, to buy those homes. As crazy as it sounds, I had a client who recently bought a home for $1.7 million. But on that property, they have three other homes. Even though his purchase price was 1.7 with his down payment, his mortgage payment came up to about $6,600. And with the other properties which he had on his lot, he was able to generate a rent of close to $5,000. So after all the expenses, his net income was net mortgage payment was $1,600.
Wow.
And that was a 3,500 square feet home where his family was living in. So again, it depends on each person's situation, where they are at in their life, how much risk they're willing to take. But what we do have seen in the past couple of years is a lot of people moved into rural properties. What we call was the COVID flight. They ran away from Toronto and they moved in and they paid whatever money they had to pay to get into
Yeah.
a rural property. Now those people are getting called back to their jobs where they don't have the ability to work from their home anymore, and unfortunately they have to sell. So we have
Yeah.
seen a much higher supply in the rural marketplace or even in the bigger home marketplace. And you have the ability to pick up phenomenal deals. Some like we have a very close friend of ours who only does rural homes, and he's been doing incredibly well this year
Yeah,
just because there is so much opportunity there.
absolutely. And I also just wanted to say that when prices go down by percentage, usually the more expensive homes go down more, right? And I think another trend that we're seeing right now is all the new builds that people paid $2 million for, maybe like 1.8, 1.7, and they're brand new builds. And maybe when they bought them, they bought with an estimate of 2% interest rate in mind. So they thought their payment would be like 3,000, but when they closed, their payment ended up being 6,000. So we're seeing a lot of those people who tried to hold them for a year, now they're ready to sell. So there's definitely an opportunity there too. In fact, for my clients who are looking for new builds, I'm recommending we look at these 1-year-old, 2-year-old homes before we go to a builder, because there's a better opportunity or higher opportunity of getting a much better deal when you buy these 1 or 2-year-old homes versus going straight to a builder.
You're absolutely right. By the way, I don't think I can share this, but I just pulled out the data between
Yeah.
homes which are between $1 million to $2 million. And in the last 2 years, they're down by almost 22%.
Wow. Yeah.
And
That's,
that's mostly country
yeah.
homes.
Yeah.
There's a
That's
great
over
opportunity.
200,000.
Yeah,
200 to 400,000.
that's a great opportunity for people
Yeah.
who have the funds to pick them up
Yeah.
because we are seeing drop in prices.
Yeah.
Let me see if I have the ability to. No, it's not gonna let me share it. It's one of those software which does not
Yeah.
allow.
That's okay. That's okay. So we'll move on to the next question. But I guess to summarize this is there's more opportunities for those buyers as well. And if you want to reach out to us, we'll be happy to help with that. As a buyer who purchased a home during the pandemic, when will I be able to see those prices again?
Great question because I'm one of those buyers too.
Yeah.
The rush which I was explaining, we became part of it. Me and my wife decided to pick up and buy a country home during those days, and
Yeah.
we saw our equity go down. To be honest with you, if you can stay there and you're happy, what difference does it make if your house goes up or down in value? It's
Yeah.
irrelevant.
Yeah.
And I have had this conversation with a lot of people who bought in 2022 and they paid higher prices. Um, the reality is, if you are staying in that home long term, you don't have any plans to move and you're not in a desperate position, stay there. Just think that
Absolutely.
your house value is back to where it was. Who cares, right? But
Yeah.
if you are in a stressful position, then you need some professional help. And um, again, please reach out to Jocelyn. She will help you out depending on which area you are in to
Yeah.
assist you to let you know when you will see the prices back there.
Yeah.
I personally believe it will take about year and a half. We'll be back there.
Really? I would
Yeah,
have said a little more.
yeah.
Maybe like until rates go down enough.
So the way, Jocelyn, I'm making this
Yeah.
statement is we do a lot of builder financing where people
Yeah.
comes to us to do pre-approvals or builder is trying to build a
Yeah.
project and we finance it. Um, Nobody's building right now.
It's true. Yeah.
Okay.
Yeah.
Most of the builders have stopped building at stage, and we are seeing a storm where immigration is still very strong. We are taking 500,000 people into Canada. The tech market in Waterloo, Kitchener, is still very, very strong. We
Yeah.
are opening up new plants in Guelph, so our employment numbers are still very, very good. But the housing is not getting built, right?
Yeah. Yeah.
And what we're gonna see is as more and more people come in, there is no housing getting built. We're gonna see the house prices to start going up.
Yeah.
As simple, it's just a supply and demand issue, nothing more than that.
Absolutely. No, you're right. And as rates go down and those, the mortgage is affordable again and people, and I think too, a lot of the times about perception. If as time goes and there's a perception that the market is stable and that there's stability and there's predictability, because people are looking for those things, predictability, safety, security. Once people start feeling safe and secure, the fear of a recession is behind us, I think then buyers will come back in the market. And we know our market, like in Ontario, it's usually from what I will say, from what I love data, so I'm always looking at data. It usually fluctuates up and down, and it looks like it's circles of 5 years. Like every 5 years, it'll go up, reach the top, have a correction. Like it looks like it's a trend where we can almost predict it, know that it's happened before in years before, and it will continue to happen, especially as the population continues to grow. So yeah, and you're right about staying in your home until you really have to move. Like if it's painful, there's people maybe who can't afford to stay in their home and it's a painful situation, then we can start to look at what to do about that. But if you're comfortable and you can afford to keep up with your expenses until the market is back up, it shouldn't really make much of a difference. And you and I buy a lot of homes. We're continuing to buy, like while this was happening, we're continuing to buy. So we know that real estate is a long-term play. You're not looking at just a 1 year trend or 2 year situation. We're looking 5, 10, 15 years. And if you're someone who bought a home at the height of the market, I would even say, that was a good. There are people who blame themselves that they made a bad move or something like that. I don't think so. I think you made a calculated move. You bought a property. If you're looking to jump out before the roller coaster has reached its final stop, then yes, you could get hurt. But if you're in a comfortable position where you can wait until prices go up again, I think you should be okay.
Yeah.
Yeah,
And another thing to keep in mind, most of the people who bought homes during that period also locked in a mortgage at 1.5,
absolutely.
1.6%
Yeah,
interest rate. I was talking to a client of mine and I saw his commitment. I'm like, he had 1.29% interest
yeah.
rate locked in for 5 years.
Wow.
They are still there for next 2, 3 years. And by
Like, what
that
would you
time,
move?
yeah.
Yeah,
So yes, even though the house has lost some value, the reality is the money you have saved up in interest has
absolutely. Yeah,
gotten you back into the game. And by the time that expires,
yeah,
the housing prices would have recovered most of it at least.
absolutely. The next question is, in this uncertain market, should I hold on to cash or invest in real estate? If I invest, then for what time frame? How long? I guess I'll just rephrase it because it doesn't make sense. How long will it take for it to be profitable?
I don't know. I just bought one yesterday and it's profitable from day one.
Exactly. I love that. And to answer the first part of the question, should I hold on to cash or should I invest in real estate? I will just say what I would do, what we do ourselves. We hold on to reserves. So you have enough reserves so that if there's anything uncertainty, you can afford to leave life for 6 months, especially for people who are in unpredictable roles where your job could disappear. You want to have reserves. Anything above your reserve fund, I would invest it, especially in the market right now where we see that prices have gone down. It's much easier to get incredible deals. We were talking about an incredible deal earlier. Those are no longer unicorns. There's a time when to get a good deal, you had to look and look and look. But right now, there's a lot of opportunities to get, even in a market where prices have gone down, you can still get something that's way under today's market value. So if you get something that's under today's market value, you are profitable right away. Yeah. So I think for me, the answer to that question is if you have reserves, you can afford, if there's any situation or something comes up, you still have funds to take care of that situation. Anything above your reserve fund, absolutely go ahead and invest it.
I agree 100%.
Yeah. All righty. I think we'll take one more question and then we'll call it a day. Okay, so this is a good question, I guess, as our final question is, many analysts believe that there's a recession coming. How will that impact real estate?
So, I believe we are in a recession already. Okay. Yes, we have changed the economics terms that we don't call it recession
Yeah,
anymore, but we have been in recession for the last year and a half, 2 years. The reality is that again, we are in a very, very unique marketplace where even though we have an aging population, we still have the ability to open up the tap and get as many immigrants as we want to whenever we
Yeah,
want to. And yes, there is a lot of people who say bad things about immigrants, and there is some bad issues. But the reality is, most of them who are coming in are very young people. They're coming in with quite a bit of money. Um, you know, the stories which my parents told me, or the generation which came before them, that they landed at Pearson with $10 in their pocket. That's not true. Most of the people who are coming into Canada today are coming in with five, six, $700,000. They're not coming in with no money. So even though we are in recession, we are getting some very high skill individuals who are coming in, which are gonna create a lot more jobs and opportunities. We have the land mass where we have the ability to get a lot of minerals. Like if you go into Northern Ontario, or if you travel to other parts of Canada, we have an untapped country. So yeah, we might be in a recession, but it's short term play.
yeah,
In a long term, it's gonna be lots of opportunities. And if you think of 2008, which was, the most recent big recession we can all think of, everybody wished that they would have invested in 2008 when the stocks were as low as possible,
yeah,
or the real estate was as low as possible. Um, that would be my thing, that if you really think that there is a bigger recession coming in, the whole economy is gonna collapse. I don't think so. We're not there. Okay.
yeah,
And if that happens, whatever dollars you have, they're gonna be wasted any which way. So the better bet would be obviously to have your emergency fund, to have your cash reserves, but anything you have more than that, do put it in some kind of investment vehicle. If it is either it's real estate, it's stock market, it's bond market. I don't know what your preference is, but do
yeah.
place your money in some kind of investment.
Absolutely. And I saw some statistics that were talking about how, on a per capita level, individually, we're in a recession. If we look at individual people in Canada, we're in a recession for sure. Families are struggling. We're seeing all the symptoms of us being in a recession, but because our population is growing so fast, the people that are coming in are spending more, such that it doesn't look like our GDP is shrinking because the population is growing. So yes, we're in a recession. And I think that if a recession had any impact on the market, I think we've already seen that. We've already seen a big correction. We've already seen some fluctuations. And I think that the Bank of Canada knows that too, which is why they're starting to lower rates. And to your point, I think that what people were expecting and afraid of, I think it's kind of, we're already in it, or it's already behind us, you know? So
You're right.
as you say, like anyone who has reserves, you're good. Anything above your reserves, you can invest. And going back to 2008, even the real estate market was shaky then. But imagine for someone who bought a home in 2008 or even 2007, you're still better off now, right? 2017 and 2018 was another market where real estate was a little bit shaky. In fact, I have a property that I bought in 2017, and right now it's almost worth double what I paid. So yes, fluctuations will come, but the long-term trend is upward.
You're right.
Okay. Yeah, so it's 8:02. We can just like summarize it and thank everyone who's here today. Thank you for staying the whole time. We hope that you've learned something that will help you achieve your goals this year. And as we said, we're always here to help. If you need us for anything, we're here. And, I hope that, we've provided good value. And if you have questions, please reach out.
Thank you so much, Jocelyn. Have
No
yourself a good
worries.
day. Okay?
Okay,
Take care.
thank you. Have a good evening, everyone.
Bye.
Take care.